and welcome to the Self-Build Hour for February. We're really happy to have you here once again, and as usual, we have invited a guest speaker to talk about a particular interest for self-builders and give you an opportunity to then ask him questions, direct him or her, but today is a him, directly so that you can get questions about that particular topic answered. We do this every month in a live format and then record it during the presentation. So you can go back and listen to it at your convenience, or revisit the information if you did already attend it live. So I'm Jenny Chandella. I'm architect and the lead of the AC Architects Swindon office. I will be your host today. As a reminder, during the session, you can use the Q&A function to enter your questions directly. I do encourage you to use that function throughout the talk as you come up with a question that you want to ask our presenter today, and then we will go ahead and answer it within the Q&A portion. If you don't have the Q&A function, you can just type your question into chat, and we'll also be looking at that and monitoring that throughout the Q&A session. So without further ado, we are pleased to be joined once again with Tom McSherry. He is BuildStore's National Business Development Manager. When he last joined us, he was really speaking specifically about new build financing and insuring your new builds. But today he's back to really talk more about the nuances of financing your home renovation or extension. Tom comes to us with over 35 years in this financial services industry, and well over half of that is specializing in mortgages specifically for new builds and extensions and renovation. He's completed 2 major home building projects himself, and he's widely regarded as a self-build finance expert. So he's helped hundreds of self-builders, which includes people embarking on new builds as well as extensions and renovations, on major home building projects. So please join me today in welcoming Tom McSherry.
Hey Jenny, how are you?
I'm doing well. Thank you for joining us today.
You're more than welcome, more than welcome. So thank you everyone, and thanks for joining us today. As Jenny's indicated, today is going to have a bigger focus around improving property rather than ground up new build, self-build or custom build. And it's an important sector. The government's new Warham's Home Plan has an initiative that now have in place and put up a significant amount of funding to improve properties because it's the biggest damage in the environment is poorly designed and poorly insulated homes. But how we actually finance these projects can be challenging at times, and there are a number of options. And what I want to do today is take the opportunity to go through those options to ensure that you fully understand the position going forward. And Jenny, you can keep me right and make sure that this all pops up in the right function, and you can see it as a full screen.
That is perfect. I can see it
Excellent.
Well, and
Thank
it's exactly as you would want it.
So super. Just very quickly as an agenda, I wanted to go through some of those key areas, which will include the types of project at the fund and the funding options for them, some of the challenges that you will face as a renovator, extender, converter of a property, and then moving into the journey that you're about to embark on. And from our perspective, the important part to that, and of interest because Jenny, I know, has a very similar view that it should start with your budget before we move to design, rather than design and hope that we can budget it. We'll look at a number of options because there are, a considerable amount of options when you're restoring or renovating a property rather than building something from the ground up. I want to give you a complete clear picture of what those options are and some of the triggers that will make them fit or not. Cash flow being one of the biggest ones, and we'll take a real close look at that. Then we'll look at the types of mortgages. In more detail, I want to focus in on stage payment mortgages. Now, it's interesting because it's the same lenders that support the self-build and the custom build sector. It's the same, very similar products. And I want to give you an understanding of how those work and how they benefit you as someone is about to restore, renovate or extend a property. And then looking at some of the key areas that will make the project successful. There's lots of interesting TV programmes that seem to consistently get it wrong. The reality is, with the right planning and support, that should rarely or never happen. And I want to give you an understanding of BuildStore's journey with you as a customer and why you should be working with a specialist. Jenny's probably given you a quick indicator. I'm obviously quite old, having been 35 years in financial services and actually coming up on 21 years for working in BuildStore, providing advice and support and guidance for people who want to improve and home build their own project. Our first major project was a renovation. So key to this topic was my journey and understanding of that. And of course, after completing the renovation project, we went on to successfully secure a plot. And I'm sitting in my self-built home, not the one that you see in the background, but I'm sitting in my self-built home at the moment. BuildStore as an organisation, importantly, last year in September, we were 25 years old. And have financed over 30,000 home building projects. So there's a medium-sized town somewhere that we take them collectively, and we're a very fortunate position to partner with that. Many of the lenders partner with BuildStore, and we create and design the products with them. We've got over 70 exclusive products to help support you on this journey, and that's really important. We have access to every lender and product, but even more important is the exclusive ones that we design and create to mitigate risk and make this journey more achievable for more people. The types of project are quite interesting, and I've given you a bit of a flavour for them here. We're just about to go live with our new light renovation suite of products, which is a property that's not habitable. So typically a property being bought, you'll often see them in an estate agent's window. The perception is they're for cash buyers only because they might not have a kitchen or a bathroom or need some renovation work done. So we've got a brand new suite of products for that. People retrofitting their home. There is definitely a growing appetite for people to reduce their fuel bills and have a more energy efficient home. I think people generally have a better outlook as to how we want to treat the environment, and our houses are clearly one of the biggest impacts on that. Heavy renovation projects. So obviously there's a similarity between the light and the heavy. The differential being heavy renovation is likely to need planning permission, and it might not be wind and watertight. This example here of this property clearly has holes in the roof and isn't mortgageable. The perception again is this is for cash buyers only. The reality is very different. These properties are all mortgageable. And of course, you may be looking to renovate and extend your current home. Not everyone wants to move. There's many factors that would drive us to want to stay exactly where we are, which could include employment, family, schools. There are many reasons. But if we want to improve the property, extending it is a way for growing families and just generally improving the space of the home. And again, how do we finance those? The very same products and solutions. And of course, the more heavier end, the barn conversions, church conversions are also a very good example of major renovation projects. It's interesting because it's the very same lenders, the very same products that can help support all of these. There are, of course, some challenges, and it's really important that we face up to those early in this whole process. Is the property structurally sound? Is it mortgageable? Will it be habitable throughout it? Do you want to stay in the house whilst you're doing some of the work, or will you have to vacate? How can you finance it is obviously really important. And is the property insurable? That's a major factor, and we'll go into that in a bit more detail. How do we insure a property during construction? Will your existing buildings and contents insurer continue to insure the property when you move it into a building phase? And then contingency is important. There's, again, great TV programs to show us how to get it wrong. No one sets out with a plan to get it wrong, but there can be a gradual creep that happens particularly when you're doing a major renovation, when you start to unravel a building, it's quite difficult to early on work out exactly how much it will cost to restore it fully, because until you unravel it, some of the problems don't uncover themselves to a later stage, particularly in listed buildings can be particularly challenging. How long will the project take? And that is really important from a finance perspective. And will it require a new 10-year structural warranty if there's some structural work going on? So these are factors to consider, and things that we certainly consider from an advice perspective to put you into the right channel and the right product. Where does the journey start? Well, we have a firm belief that on any construction project, until you know your project, I don't think we should be spending any real significant amounts of money until we've got a real clarity of what that budget is. And working with architects like AC, it's particularly helpful for them to know what your budget is. I hear clients saying, "Oh, I don't want to tell my architect the budget because they'll spend it all." Well, let's do them the service of sharing the budget, because there is a better chance of them bringing the design in on budget if they know exactly what you've got to spend. What we don't want is something designed that you then can't afford to build, or indeed have to re-engineer it or value engineer it to bring it back into the budget. That's a really easy thing for us to look at and to work out. We have a team within BuildStore that at a very early stage will be looking at your budget, which is how much liquid savings you've got and how much you can borrow towards the project. That gives us a big pot of money that will deliver the project. Now that either gets broken into 2 parts or 3 parts. Those of you who already own the property, it's 2 parts. It's your professional fees and your construction costs. When you're looking to buy the project, it's the purchase price, the professional fees and the build costs. We'll touch on professional fees at a later stage. It's important we don't forget them because you have to pay for them up front. The first real shout out that I want to give here is to the particularly this when properties aren't deemed habitable, and it's not just a simple, new kitchen and bathroom. It's a specialist sector supported by regional building societies, and that many of those are our exclusive partners. They are now providing us with up to 95% of the money to buy a project and 95% of the money to restore the project. Now that's a significant step forward from where the sector was a lot of years ago, and quite clearly it means that there's an opportunity to change the demographic to younger people who maybe want to go on the housing ladder and restore a property and build a bit of equity by buying something that needs done up or extended or renovated. So let's start with the budget. That's an important point for us to pick up on. And as I said, that's a service that we provide free to our clients to work that out at an early stage. It is an area of specialist advice. This isn't buying a house that's habitable and ready to move the furniture in. There's a number of considerations here. We need to think about the purchase price and what its value is. We need to look at the costs of doing the restoration, renovation or extension, and that's including both material and labour costs. That can vary, of course, because depending on your own input to this, I clearly had very little skills to add to our project at any time, so I had a greater need to pay people. You may, of course, have a skill set that allows you to do some work yourself, but it's really important that your build costs are detailed and are sufficient to complete the building project. We prepare for contingency, and that contingency can vary depending on, one, your experience, and two, the project type. Don't be scared to include 20% contingency, because things tend to creep. And as I said, when you unravel it, sometimes it costs a bit more. Let's prepare for that and include contingency. And of course, those professional fees, which we'll touch on later. As an advisor, very unusually, my focus point would not be on the interest rate to begin with. The 3 C's that I've got highlighted here that are all intertwined, because there's no single one that we have to focus on. All 3 are important, which would be the construction type, what's the property made of, and if we're extending it, what will be the materials used for the extension, the cost of the build, and probably the most single important thing is the cash flow. And what is cash flow? Cash flow is when the money arrives in your bank account to pay people, suppliers and professionals. Without that cash flow being right, That's where stress starts to build in a project, because contractually not being able to meet your builder's terms is problematic. If you've got things on order through a builder's merchant, you need to make sure you can meet their payment terms. And it's about ensuring that the thing moves forward smoothly. Cash flow is the part that will take much of the stress out of it. And it's where the advisor needs to really focus their time. So what are the mortgage options and the solutions? Well, if you already own your home, depending on the size and the scale of the work, and this is I suppose, a sliding scale from simply fitting a new kitchen or a bathroom or painting and decorating, it's fairly cosmetic. We could be using simply cash savings. It may be an unsecured loan if it's a small amount that's been done, under £25,000. If you're tied into your current mortgage for 5 years with exit penalties, but you have sufficient equity, we might be asking the same lender for a further advance. They would release a second tranche of money to do the work. Could be a second charge, or indeed remortgaging the property to a new lender, raising capital. That would be a good example if you're coming to the end of a deal anyway, as we're going to a new lender. But importantly, that new lender needs to understand, as does the existing lender, the scale of the work that you're about to take on. And importantly, you should be engaging with your current buildings and contents insurer to see that they will continue to insure the property during the construction phase. If they don't, that has to be replaced with a more specialised security called sites on all risks policy called site insurance. So it may be that those options are available when you have already owned the existing property. Of course, it may be a tailored renovation mortgage, particularly as you move out of that very light cosmetic changes into a greater level of construction required and a greater level of renovation. Of course, if you're looking to buy the project, then it would be a residential mortgage, depending on, again, the scale of works, a specialist renovation mortgage, or indeed bridging finance. Going to auction, for example, the timescales involved in securing the funding for those is very short, and often bridging is a solution to take care of the very quick purchase of it. But there are some areas that we need to really understand where the risks are associated with bridging, and I'll touch on that later. So depending on whether you own it or buying it, gives us a variety of options to fund the project. And that ability to have a holistic view at all of those options are critical when you're working with a specialist advisor. If we're moving away from that light touch and we're moving to more property extensions, properties that aren't habitable, or a major refurbishment and restoration of a home, then we move again, perhaps remortgage. But what are the things to consider? The scale of the work. The borrowing with a remortgage, the high street lenders are limited to the current value of the home. They can't look beyond that. So you may be restricted how much you can borrow on the loan to value, as it's capped to the current value. And validating buildings and contents, as I've already highlighted. And the funds are released in a single stage with a remortgage. So you're paying for it all in day one when you release it. You may not be spending it quickly. So is that the best option? It is for the very light home improvements. Bridging is another option. Now, this is for your primary main residence, so it's classified as regulated bridging finance. And the Financial Conduct Authority have a limit on regulated bridging finance of 12 months. That's 12 months for you to either secure it and renovate the property and pay the funding back. So it's feasible, but it is limited to 70% loan to value. So there is a need for a slightly higher deposit level, and the funds are only released after each stage of the work. So you also not only need the deposit, but you need to have the cash flow to be completing each stage of the work. And I'm going to show you a case study that's going to get into this in a more granular detail. Of course, the property is going to go down in value initially. And that's really important to understand, because if the lender releases funds based on value, that can be problematic, because you're not going to be increasing value and getting funds back at that point. You may not be, because it's coming down in value. It's a real important consideration from an advisor's perspective to see whether this is suitable or not. Obviously, a higher level of contribution and the bridging is typically a more expensive option. The renovation mortgages, however, build a greater level of flexibility into both light renovation, restoration, and heavy renovation projects, those examples that I gave you images of at the start. And unlike the residential lender who's limited to the current value, we can borrow up to 95% of the current value. That might be to repay the current lender that we're paying off. We can borrow up to 95% of the purchase price if you're buying it. You can then borrow up to 95% of your construction costs, which will be likely beyond the value of the house, because the specialist renovation products, the borrowings against the end value of the project when it's finished, it's not limited to its current value. Now, what that clearly does is give you an ability based on your income and affordability to borrow beyond the value of the house and create a more meaningful project. Actually deliver the house that you truly want rather than being limited to its current value. And of course, if you already own the home, there is the potential to borrow 100% of your construction costs with some additional flexibility in the product design that it's interest only during the purchase and construction phase. The product design is such that your interest rate is temporary during that construction phase. As soon as the build's completed, then we switch you back to one of the lender's standard residential products. So you're not even tied into the renovation specialist product beyond the period of construction through to completion. So each of them have their space, and the job of the advisor with you and understanding the project is which one is the best and most suitable solution for you. I want to give you an example of where that ability on the renovation mortgages, where you're extending your home, can be truly beneficial. This project was a house that was valued at £300,000 with an existing loan of £270,000. Well, the problem we have there is the high street lender and probably the existing lender won't release any more money because the loan to value is restricting it based on the current value. The extension project's £80,000 and there's some savings to put towards it. The key is, once the extension's completed, the increase in value of the house is up at £450,000. What we can do is take the renovation mortgage on day one, release 95% of the current value, which pays off the current lender and actually gives us a bit of a surplus, £15,000. We can then borrow up to 95% of the build costs. We actually don't need all of that. So the total funds are made available, giving us a loan facility of £346,000, which is inside the new end loan value, 76.88% of the £450,000. All of a sudden, we're fully funding the project to an end value of £450,000, not restricted to what the high street bank lenders have as the current value of the home. Another case study, just to bring this really to life, there is looking at a property that's uninhabitable, these light and heavy renovation projects that I'm speaking about. This property has a purchase price of £250,000. And I want to show you the difference, that the different funding options. The renovation mortgage can provide the money before the stage of the work begins, not based on the value, based on the cost. So in this instance, the renovation mortgage at 95% on a £250,000 purchase would release £237,500. If I go down the bridging route, then we're going to get 70% of the purchase price. I want to highlight the difference between the two products. Already, there's a £62,500 funding gap between the renovation mortgage at 95% and the bridging facility. However, as the progress of the work carries on, we're going to have the project move into the next stage, which is where we strip the property. And as I mentioned, the property is going to be going down in value. It doesn't cost a lot to strip it, £14,000 in this instance. The advanced stage payment renovation mortgage gives you at the beginning of this stage £13,680. Because the bridging facility is in arrears, you receive nothing at this point. So of course what's happened is the funding gaps increased. You need a bigger pot of money. So as we move into the next stage, which is taking the property back to wind and watertight on this heavy renovation, new windows, the roof's been replaced, there's a much bigger cost to this one. And the cost of this stage is £57,000. Now, advanced stage payments on the renovation mortgage in your bank account before the stage begins is £54,207. The bridging can only give you 70% of the previous stage. So now what we've got is a process that has taken the bridging gap to a much higher figure. There's now 76,000 of a difference. And of course, we move on through it into first fix and plaster, 37,400. Again, the money on the renovation mortgage gives you the cash flow up front to pay for it. And what you will get on the bridging facility is a percentage of that previous stage, which helps slightly at this point. So you can start to see the difference between these product types is quite considerable. And the difference is actually cash flow. How much you can borrow at each stage and when the money is going to arrive into your bank account. This final stage is 60,280. The renovation mortgage in advance gives you 57,000. You're getting 26,000 at bridging at this point, a considerable amount less. Therefore, the gap between the bridging facility and the renovation mortgage ends up a considerable figure, up at £146,000. Of course, what you can do with these mortgages is take something that's completely uninhabitable through to a completely habitable home with a far better thermal performance and running costs. Two case studies, one extending a property and the other renovating an uninhabitable home. I mentioned professional fees. There are hidden costs that we need to be clear on. And of course, there's your professional fees, your surveyors, perhaps a quantity surveyor, engineers, architects, investigative work around environmental reports, BAT reports, archaeological, tree preservation. There could be a number. It's important that you have a visibility of them and an understanding of them because it comes out of your savings. If you think you've got 200,000 savings to put into the build programme, but you've got £40,000 in professional fees, that's 40,000 you're short on the construction costs. So have a good grasp and an understanding of what your professional fees are as well. So to recap that renovation mortgage, it's interest only during construction, up to 95% of the existing property and 95% of build costs. On the heavy renovation, the new light renovation products at 85 and 85. Up to 100% of your costs if you're already on the property. The stage payments can be after the stage is finished if you've got funds to put in, or if you prefer the money at the beginning of each stage, which provides a positive cash flow and works brilliantly well if you're building an extension using off-site manufacturing systems like timber frame or ICF, because it gives you the money up front to pay for the superstructure to be manufactured, delivered and erected. Importantly, the stage payments are guaranteed on the renovation mortgage. So there are products that are valuation based, and of course that's a problem of the values going down the way. The renovation products that are exclusive to BuildStore are guaranteed stage payments. It's irrelevant that the value drops when you strip it. You will be given your stage payment contractually, which mitigates risk and lets you know exactly what you've got at each point, enabling you to pay the right people at the right time. Funding up to 85% of the end value of the project, not limited to its current value. And of course, if you are buying a project to restore and renovate, you are allowed to have two mortgages at the same time if affordability fits, where you're staying in your current home whilst you're doing the restoration and renovation or extension, moving into the new home and completed and selling your own. The renovation mortgage doesn't have the 12-month time limit that the bridging facility has. And it's not 12 months from my own point of view, because If the project takes you 12 months to do, you've still got to get a completion certificate, which might take 8-12 weeks, which means you can't actually remortgage the property to a residential high street product because it doesn't have its completion certificate yet. The reality is you want the build to be completed in 6 to 7 months on a bridging facility to get the completion certificate through so that you can then remortgage it. That time limit is something you need to consider because quite often, again, when you strip a project, you don't know how long it's going to take until it's stripped. So that's a real important one for us to manage the timescales to give you best advice. Interest rates now, and this has evolved because actually very recent, there's rates now as low as 4.75% on stage payment mortgages. A typical rate 5.2 to 5.5%, but remember it's interest only. So it doesn't feel like that. And the minute the project works are completed, you get to pick a brand new residential project. So you're not tied in on Buildstore's exclusive products to the current product that you're using to restore the property. Remember, your professional fees will reduce how much savings you've got to put towards the build. Important that we understand that. That regulated bridging facility has a shelf life of 12 months. You need to understand on stage payment mortgages, are they based on the value at each stage or are they guaranteed stage payments? Unless you own the property unencumbered and have considerable savings, the guaranteed stage payment model will mitigate risk considerably. Will the property require a 10-year structural warranty? So is there major structural work taking place? And an extension would be a good example because it's important if you are, there's a 10-year warranty to enable it to be mortgageable and mortgaged by someone if you're then selling it within a 10-year period. It's important that we build in contingency, particularly on major renovation projects. And it's important to understand the journey that Buildstore take you and support you. Because this is not just about giving you access to every lender and every product and best advice. It's the support process. We will be looking at the costings of the project to ensure that you're completing it, that the build costs aren't irresponsible, that you've not had quotes when major items are missing. That's done by industry professionals. We're then modelling the cash flow and the advice will be based on your project specifically. And that cash flow is tailored specifically to your project. There's not 5 slices of 20%. Everyone's tailored to your own project to make sure your cash flow's right. Dedicated support with application through to the lender, arranging that site insurance or structural warranty where required, right through to mortgage offer. But the job's not done then. In fact, much of the time that we will spend supporting you will be after this point, because our customer service team's working with you on that initial drawdown, which is to secure the mortgage for the lender against the property. But we'll be speaking to you on a regular basis. The customer service team are the ones that will continue to work with you to deliver your stage payments all the way through. So it's us that does that in partnership with the lender. We don't allow you to go off on your own and hope that it works well. We'll be doing build monitoring with you, calling you regularly to see that you're on time and that you're on budget. That's important because if something goes wrong at an early stage, perhaps you've had an overspend and found difficulties that you weren't anticipating, well, let's speak to you about it and give you support and engage with the lender if things should change. So in summary, ironically, interest rates not being the most important thing, as I've already said, the cash flow is the most important factor. When will you receive the money all the way through the project to enable you to pay your contractors, suppliers, manufacturers, builders, merchants? Plan your home building project with your architect around your budget. Don't design something and hope that you can reverse engineer it into it. Make sure you know all of your costs, the purchase price, all of the build costs, your professional fees. Right, so going direct to a lender is an option with you, that you have that maybe your existing lender, but it restricts you. It's important that you take this holistic review to what is the right solution for your project. And if it needs appropriately underpinned with insurances, we'll make sure the right site insurance is there. If the buildings and contents is no longer suitable, and if it requires a structural warranty, we'll make sure that's in place. So Bill Store's advisors are definitely experienced in delivering these major construction projects. And I think that's critical because this isn't just vanilla mortgage advice, it is specialist mortgage advice. And I would implore you to deal with a specialist in this instance. We are more than happy to give you any help and guidance, particularly that early project guidance around the budget and what is the right mortgage solution for you against all of those project types and options that you have. And of course, what I'm more than happy to do, Jenny, is answer any questions. Shall I stop sharing, Jenny?
Yes, that would be great. Thank you very much, Tom. I know that would have been or has been really helpful to a lot of people who are thinking about a renovation project and thinking that maybe they need to fund it all from the savings and how would they do that. So to really understand that there are funding options, whether they own the property or they don't yet own the property, is really a key consideration for a lot of people.
Yeah.
So at what stage, for a person who knows they want to renovate a project, they maybe have seen a few things online that they like, at what point would they start talking to you? Would they start talking to, and let's say they're going to buy the property cash, and they're in that fortunate position. Should they be talking to you already before they make that purchase to get some advice, or at what stage is the best time to start talking to you?
I would definitely take advice. If you're buying the property with cash, it gives you the ability to secure it. Of course, that might even be at auction, so you don't have time restraints. But it's important to take advice early because does it require planning? If it's within permitted development rights, what's the cost of the restoration? If you've ploughed all of your savings in to purchase it, how do we renovate and restore the property? Is the property insured in its current condition? Because if it's not habitable, it's then vacant. Some insurers need you to be in the property, not have the property vacant for more than 30 days. So even early, we could be talking about to insure the property properly. And then looking at that budget so that you're not stepping in to purchase something that you actually can't afford to restore fully. Yeah. So it's understanding that savings pot that would allow you to buy the property. How much can you borrow? Put the two of them together. Does that deliver the project all the way through to completion?
Yeah, fantastic. And we often have people, I talk to people at that SBRC, the HBR shows all the time who say, well, I want to do this renovation project. We're planning on doing X, Y, Z. And then I say, well, what's your construction budget? And they say, I don't know. So, and it's a really typical thing that someone going into a project knows what they need, but would have no idea how to cost it. And renovation projects, as you've discussed, are really difficult to cost because there's so many unknowns until you really get into it. Build Store, are you able to give some advice on whether what they can afford to borrow is realistic with the scope of what they're trying to achieve?
Yeah, and people coming along to these events, there's a lot of industry professionals that you can get free advice from at the NSBRC and the various events, Jenny, that we'll go to, including a QS, maybe a very good sound point to say, actually, this is a complex one. There are QSs who could do that early stage. That's not an overly expensive part to get them to do that early budget setting with you. And I think it's important when it becomes more of a major project that you build your professional team around you, including your specialist finance, your architects and engineers. It may be a QS, and in this instance, a planning consultant. So building that professional team is really important because having something missing from that journey, you might find it'll create a bump in the road further down the line. So embrace professionals at an early stage. And some of the examples that you've given, Jenny, I think the National Self-Build Centre is a great example where you can come along to focused planning events, meet the architect, superstructure providers. So yeah, there's plenty of places to come where you can help you on this journey to get it right.
Yeah, absolutely. And that's one of the things that we always say is start building your relationships early. You might not even have a project right now. You might just have an idea about your project. But the more you can talk to professionals, the more you find out what things you're going to need to know and how you can put everything in place. And even, you know, who you think you would like to work with and who you think you would not like to
You
work
would not
with.
want to work with. Yeah, I mean, Buildstore really have got an end-to-end process because, as you know, we own Plot Search, which is a significant database of land and property that's on the market now. So it's not just plots. There are major renovations projects on it. There are conversion projects on it. It's free, www.plotsearch.co.uk. But that allows you to do that early window shopping to say, in my area, what projects are there?
Yeah.
And then engage with us to say, I have seen something. Can I work through my budget? Because knowing your budget allows you how much can you allocate to secure the property, perhaps, your professional fees, and your build costs. Is that the right project? But at the heart of it sits the finance.
Yeah, excellent. Yeah, no, and I think that's, well, it's the biggest conversation that we have early in a project is how to set a realistic brief relative to your budget. But without a budget, it's impossible to set that brief realistically.
Yeah.
So
it could define a property extension. Is it a single story? Is it double? Is it wraparound? All of that comes from the budget. You may actually be able to deliver a better project than you think, getting the right advice and support from a finance point of view.
Yeah, absolutely. Better to proceed knowing what your options are than guessing what your options are in terms of those finance. Would you say when you're looking at new build projects versus extension renovation projects, do you typically advise different levels of contingency are kept for those?
Yeah, I mean, I suppose renovations like new build, there's a spectrum from a fixed price with a main contractor, which you could be using, and there is very little, if any, need for contingency because the risk sits with the contractor. There'll be some PC sums that could change, but not a lot. You could have a project manager who will be doing a lot of the work to mitigate risk, down to you project managing, down to you DIY end at the scale. And depending on your experience on DIY, that would maybe increase the contingency. But I think there is no doubt that some of the major renovation and restoration listed buildings would be increasing that contingency to somewhere nearer 20%. And it's not that, as I say, you ever plan to get it wrong, but until you unravel a building, you're often not unsure. You're often not sure exactly the scale and the size of it. So build contingency. The beauty of that facility, that contingency facility with the lender, if I've got a £50,000 contingency on my project and I bring it in on budget, the 50,000 drops off. I've not paid for it. I've not drawn it down. It's there to take if there's been a gradual creep or a movement on something. So don't be scared to include it. In fact, the lenders would probably welcome a healthy contingency being built and would be more concerned if you weren't including it.
Yeah, excellent. Can you talk a little bit more about structural warranties and when people would need to be thinking about those? Do they need to think about them early in the design stages, or is it something that comes further down in detailed design, for example?
So the two safety nets I spoke about, the site insurance and the structural warranty. The site insurance, if your buildings and contents don't insure the building, or you're buying something that you're not living in and you're going to do restoration work, it's likely to be an all risks policy that insures the building during the purchase and the restoration work through to completion, when it then gets a normal buildings and contents. Some projects won't need a structural warranty because if you're not doing structural work on the property, there's no requirement for it. It might just be building regulations or building warrant. But the minute you move into structural changes to the building, adding extensions onto the building, or perhaps taking an agricultural building into a residential home, there will be need for a 10-year structural warranty. It's important that that's discussed before the project starts, because the warranty provider and their engineers will come out at each stage of the project and inspect the property that the work's been carried out to a satisfactory level, like building control do. And at the end of it, you pay for the policy at the start of the work, and the policy goes live when the build's completed, because that's when the 10-year insurance policy comes in. And that makes sure that the project is mortgageable. And for someone who wants to, it may be that people are doing this with cash. But please put a structural warranty in place, because only too often we get the phone calls to say, I didn't think I was going to sell it, I'm now selling it. I only finished the work 3 years ago, and the buyer's solicitors are asking for a 10-year warranty, which I don't have. For the cost of it, make sure that you're properly insuring and putting an appropriate warranty in place.
Absolutely, absolutely. Well, thank you very much, Tom. Are there any other questions? If there are, please do type them in. But I think we've covered all the questions that have come up today. So thank you very much for your time. And as we've stated, we will have this recording up on the website for later viewing, on-demand viewing, probably within a week's time. So there was a lot of really detailed information about the different options that are available. I'm sure people will be interested to go back and re-listen to that at their convenience. So I'm just now going to close with a few of my top takeaways. So just sharing the screen. So the things that I wrote down are a thing we talked about quite a bit is to make sure you establish your budget early on, and so you can be realistic about what's possible. As Tom said, you may find out that actually more is possible than what you had initially thought, but being really realistic about that is critical. And to be mindful of what your full budget entails. So your budget includes the construction costs, but it also includes the construction or the professional fees associated with those works being completed. And that's if you already own the property. If you don't yet own the property, you also need to be mindful of the cost of acquiring that property, and that becomes your full budget. So your mortgage options will be different depending on whether or not you own the property. So it's really important to talk to a specialist advisor to understand what those mortgage options are. And also bear in mind that your property will come down in value as you begin construction. So that's really where those guaranteed stage payments come into play and are critically important for people who are financing their major renovation project or light renovation project. So I do thank you all for joining us. We are going to be back next month, but of course we also are taking part in live events, and as Tom and I were discussing, it's so important to start meeting professionals, get some advice on what it is that you're aspiring to do, whether or not you have that property or whether it's just sort of starting to be something that you're researching. So HBR at the NEC in Birmingham will be taking place the 22nd or the 19th through the 22nd of March. That is a Thursday through a Sunday, I believe. And then we have a self-build seminar taking place at the NSBRC in Swindon. That's Saturday, 11th of April. And that is a small group session. Tom will be there, and we've got structural engineering, some project management, ventilation specialists. So it's a really good event that is a small group of individuals where you can ask a lot of questions and start to once again interact with professionals who you may be dealing with in the future. So we'll be back next month in March, on the 12th of March, same time, same Teams format, and it will be me presenting on sort of those early design considerations. So, and it'll be somewhat new build related, but it'll also focus on considerations for renovations and extensions as well, and how you start to pull your project together. So please do tune in for that, and we look forward to seeing you once again. Thank you so much for your time.